For a lot of people, investing feels like walking into a high-stakes casino. But for the pros, it's not about luck at all. It's about having a blueprint. So in this explainer, we're going to break down that exact system and show you how to go from just gambling to using a structured, repeatable process.
This is the big question, isn't it? It's what holds so many of us back. You see a stock absolutely take off, and you can't help but wonder, was that pure skill or just a lucky roll of the dice? That fear, that uncertainty is what keeps a lot of potential investors on the sidelines. But it really doesn't have to be that way.
Look, every investor really faces two paths. On one side, you've got guesswork. It's kind of chaotic, right? A mix of emotional reactions, chasing trends you heard about online. It's all based on luck. But on the other side, you have a system, something logical, repeatable, and driven by a real process, not by drama. That professional approach, that's exactly what we're going to build today. All right, so let's actually build this thing. We're officially making the move from luck to logic. We're going to put together the kind of blueprint that guides professional decisions and hopefully turns all that market chaos into some real clarity. And here we go. This is the heart of the entire blueprint. It's a 4-step workflow, and trust me, the order here is absolutely critical. You always start with the fundamentals. Basically, is this a healthy, well-run company? Then you check the technicals. Okay, how is the stock's price actually behaving? After that, you gauge the sentiment. What's the overall mood or vibe around this stock? And only after you've looked at all 3 of those pieces do you bring it all together to make a final decision.
So, a great system is awesome, but it's useless if you don't have any ideas to feed into it. So where do you even begin? Let's talk about the starting point for any investment, where these ideas actually come from.
Ideas really can come from anywhere, but the pros systematize their search. They'll use fundamental screeners to find companies that are financially strong. They keep an eye on market news to spot those big picture themes, like AI or clean energy. They even use technical scanners that automatically flag interesting chart patterns. This is basically the top of your funnel. It's how you cast a wide but very intelligent net for new possibilities. Having a long list of ideas is the easy part. The hard part is finding a truly great one. And that means you have to filter for what's called a high conviction bet. That's an opportunity where all the different signals from every corner of your research start to line up and point in the same direction. Now this is what we're talking about. This is what that signal alignment looks like in the real world. You're just getting green lights across the board. A high Piotroski score, that tells you the company's fundamentals are improving. Check. A strong DCF upside, that means your valuation model thinks the stock is a bargain. Check. A constructive candlestick, that's just chart speak for positive price action. Check. When every part of your research is singing the same tune, you found a high conviction candidate. Finding a great idea is, exhilarating, but it's only half the job. The other half, and honestly, it's arguably the more important half, is managing your risk. Because no matter how fantastic your research is, you are going to be wrong sometimes. The best investors know this, and they don't just accept it, they plan for it. I want you to really let this one sink in. Even excellent ideas fail, portfolios survive through breath. This is one of the most critical truths in all of investing. You can do everything right on one single stock and still lose. A portfolio survives because it isn't banking on any one idea to be the hero. So this is what that breadth looks like in practice. It means spreading your money across different, unrelated areas of the economy. So, if the entire tech sector has a bad year, maybe healthcare has a great one, and your overall portfolio stays much more stable. It's the classic advice: don't put all your eggs in one basket. This is what gives your capital the resilience it needs to grow for the long term. Okay, this brings us to the final and maybe the most powerful piece of this whole puzzle. This blueprint, it isn't something you just set up once and then forget about. The real path to becoming a consistent investor is about constantly learning from your results and refining your process over time. This is your feedback loop for getting better. First, you start small. That way, any mistakes are just learning experiences, not catastrophes. Second, you meticulously record what happened. Why did a trade work out? Why did it fail? And third, based on that real-world data, you go back and refine your rules and your filters. Then you just repeat the whole process. It's a cycle of continuous improvement. And that's really the bottom line, isn't it? This entire workflow, from coming up with ideas to finding that alignment to managing your risk and then constantly refining your process, this is the bridge. It's what takes you from being a beginner who's just relying on luck to an investor who's making consistent, logical decisions.
So, as we wrap this up, let's make it super practical. Don't worry about trying to master everything all at once. Just looking at this entire process, what's the one small filter, the one little part of this system that you could start working on first? Because that's where the real journey begins.